Hey everybody, today is January 12th, and today we're talking about the stock market. We're going to talk about the CPI print inflation data that just came out and how that could affect the market, and whether whether the market will continue to hold this bounce and continue up higher, or whether that could be bad news and roll over and retest the 200-day. Before we begin, please read this disclaimer. You can pause this video as you read it. Okay. So the market is overall in a macro level looking pretty good, right? We're still holding really bullish technical structure, right? In this really controlled uptrend where we pull back once in a while and touch these moving averages, right? In 2021, which is last year, we had multiple times where we pulled back to our short and midterm moving averages, right? Our short-term moving average being the 50-day moving average, which is the silver line, and the 100-day moving average, which is this gold line. And of course, our longer-term moving average, which in the S&P 500 hasn't been tested in over a year, right? This blue line. Now, I said in a previous post how it's very common and really in a healthy bull market, we want to see these pullbacks. And these could be great buying opportunities, right? I've talked about in this recent pullback how I did actually buy. I added to some of the stocks that I like, right? And this is not just for the S&P; it's also for the Nasdaq and the Dow, right? The Dow. And so right now, we are attempting to bounce for the third time in basically a month, right? We had 3 touches to the 100-day, and so far the market is looking very strong. See how when we come down to the 100-day, this gold line, right? We did have a touch here, but the first time and the most recent time, which is 2 sessions ago, we didn't even touch the gold line. We just scored this bounce, and we had this really bullish reversal hammer candle with a long wick, right? That means a lot of buyers came in down at the lows and defended the 100-day moving average. And right now we are seeing a bit of a follow up, but some weakness, a little bit of weakness right now. We're starting to see the market pull back a little. We saw this bounce came up, and we gapped up this morning, but of course we're fading the gap. So this is not necessarily a bad thing because we are filling this gap here, and that could provide support level as we hold this level and push up higher. The market tends to like to kind of consolidate around kind of the halfway point between the top and the local bottom. So right now, so you can kind of see here and also here, right? The good news is that we're consolidating now above this previous consolidation, right? So we're above that. So we can hold this level, hold this gap as support. I believe that will continue up higher. And if we can zoom out a little bit and look at how that would play out. Of course, we have this sort of like resistance level right here that we've been trying to break through, right? Obviously, this breakout over here was rejected. So what we want to see is a strong break, hold this level, and then push up higher, right? Hold this resistance level, which we are pretty much on right now. So we can break above, hold it, pull back, and then perhaps continue up higher, right? If not, these short-term moving averages, the 50 and 100, should act as strong support because you'd already defended it 3 times in the last month, right? So let's talk about other data, right? Oh, by the way, the market is still open. It's going to close in 15 minutes. But yeah, we should probably see, if this video does go into the last 10 minutes, we'll probably see some volatility to either upside or downside. So big news today was the inflation CPI data, right? Came out. Inflation rises 7% over the past year, highest since 1982, right? So usually it's very interesting because this type of data, people would think that, okay, now the Fed's going to raise rates and they're going to do tapering to try to curb inflation, right? Because it's running out of control. One of the major themes, one of the narratives last year was that we have really high historic inflation, and we just confirmed that right now, right? Since 1982, the highest inflation. But the interesting thing is that if you look at the dollar, you look at the dollar, right? The dollar is actually plunging right now. And the interesting thing is that when we first had that inflation news come out, a record inflation, that was back in November, and that was basically the start of this huge rally in the dollar, right? Which put, of course, weakness in the stocks and cryptocurrency markets. But now with the same data, basically confirming what we expect, and now we have expectations that the Fed are going to continue with their tapering and also the rate hikes, right? And not only 3, but they're saying now we might have 4 or even 5 rate hikes this year, right? The market isn't, the dollar isn't really reacting the way people think if there's not a lot of strength, right? Because you would think that would cause weakness in the stock market, and that usually correlates with strength in the dollar, right? But the fact that the dollar is coming down, I think that we're starting to see that this sort of news of the tapering and the yield, the rate hikes is starting to be priced into the market, and that market participants aren't scared anymore. are worried about this, and so we're starting to see more strength in the market, and of course a continuation of this uptrend, and really everything's looking very, at least for now, is looking very good in my opinion, and I do think that as long as the market doesn't get scared of any upcoming news from the Fed, as long as there's nothing really surprising that comes out of the Fed, I think the market will continue to just really digest this news and really learn to adapt in an environment where there are rising interest rates. And because it's been done before, right? In the 90s, the interest rates were pretty high, and the market was basically in the tech bubble, right? Let's go back to the 90s. So you see that the 90s, here we had this huge rally, right? And by the way, we saw how the inflation data from let's jump to the monthly chart. Right? This is very far back, but you can see how this is the highest inflation since 1982, right? But look what happened in 1982. 1982 was basically the start of this bull market that went for 18 years, from 1982 to 2000, right? Into the peak of the tech bubble before it popped, and we basically went sideways in the 2000s, right? Let's look at the Nasdaq. The Nasdaq, you can see very clearly that you have a huge parabolic run into the late 90s, right? And then the tech bubble burst, and we had a crash. But that started in 1982, basically, right? Over here, because remember we had stagflation in the 70s, right? The Fed had a hard time controlling. So stagflation basically going sideways, right? The market didn't really do anything. And in 1982, we had this epic bull rally. In the 80s, of course, the Wall Street crash 1987, and this epic rally when the tech bubble happened. So, oops. So basically what I'm saying is that the market doesn't necessarily need to pull back significantly or crash because interest rates are hiking. I think that we've had high interest rates, but also with correlating or coinciding with all-time highs in the stock market. It's happened before, right? Especially in the 90s. But so it's not the case that just because we're tapering or rates are increasing soon that the market has to pull back and crash, right? So basically what I'm saying is that at the end of the day, we have to look at how the market's reacting. And the market right now is showing that even though we've had record inflation, it's showing that the market is willing to adjust to this new environment, right? So just going based off the technical, this is why fundamentals are important, but at the end of the day, the chart tells the truth, right? The chart tells what the institutions are doing, right? If an institution wanted to sell because they think the market's going down, then this would have already fallen down more. And who knows, in the future it might fall down more for different reasons, and we'll definitely update you as that happens. But for now, we just have to trade based on what the chart is telling us, and the chart is telling us that we have strength into these pullbacks, right? That the market is not afraid as people may think it is, right? The dollar is collapsing right now, and the yields are still strong, but they're starting to pull back a little bit, right? And we'll see if this is going to be, because we are in a short term overextended, right? Look at the yields, the 10-year is in overbought territory. So this might pull back a little bit, pulling back with the dollar as well. And that could, if the dollar, because if you look at the monthly chart in the dollar, right, it does look like it is starting to find some resistance at this level, right? And you look at these candles, right? These are not bullish candles, right? This is rejection. You see these longs wick to the upside. This is selling pressure above 96, right? So we might see a pullback and perhaps retest this level of support around 90, right? And that's gonna take a lot of selling pressure off the stock market, and it gives the stock market more fuel to push up even higher, which is what I'm expecting, right? So just to summarize, for now I am optimistic and bullish on the market going into 2022. Yeah, as long as we continue to, I think the market will continue to digest the news of the tapering and the interest rates, and we might see some pullbacks once in a while. But unless we break major market support, right, break below these moving averages and below these support levels, we should give benefit of the doubt to the bulls that this uptrend is going to continue up higher, and that we will continue to that was ugly, continue to make new all-time highs going into the rest of 2022. So update you guys next week see how the market reacts to the remainder of the years, right? We still have tomorrow and Friday. We'll see how if there's more data that comes out, how that reacts, and yeah. Thank you for watching this video. If you found it useful, helpful, informative, please like this video, leave a comment below, and subscribe for updates. Appreciate all your support. Thank you again, and have a great day.